All right, let's dive right in. Today, we're taking a close look at Opendoor Technologies. We're going to ignore the noise, ignore the headlines, and just focus on the cold, hard technical data to see what story the numbers are telling us. So, what's really going on with Open? Let's find out.
So that's the big question for today, right? What is the data actually telling us about Opendoor's stock? Is this a story of hidden strength, or is there some serious weakness under the surface? The evidence is going to give us the answer.
Okay, here's the first number that just jumps off the page. It's the overall technical score. Out of a possible 100, Opendoor gets a 26.04. Now, you don't have to be a Wall Street pro to know that feels pretty low. It immediately suggests there's something weak going on here that we really need to dig into.
And that low score leads us to one very powerful conclusion: bearish. The final verdict from this technical deep dive is decisively negative. So, for the rest of this analysis, our job is to unpack the evidence and show you exactly why the data is pointing so strongly in that direction.
All right, let's start digging in. The first key thing to understand is that this isn't just a momentary dip or a bad week. The analysis shows that this bearish outlook is consistent, whether you're looking at the short-term picture or zooming way out to the long-term view. It's painting a picture of persistent weakness.
First things first, let's get our bearings. The current trading price is $1.80. Go ahead and lock that number in your head because every single data point we look at from here on out is going to relate back to it.
Our first category of evidence is the trend. The easiest way to think about a trend is as the stock's general direction of travel. Is it climbing a hill or is it rolling down one? Well, for Opendoor, the data suggests it's definitely rolling downhill.
And the numbers back that up. The trend score is a very low 20.83, which confirms that bearish direction. But here's something interesting. The ADX score, which measures the strength of the trend, is only 16.08. That tells us that while the stock is definitely drifting down, it's not in a complete freefall. Think of it less like a waterfall and more like a slow, steady river flowing south.
This slide, wow, this really illustrates the challenge here. Think of these simple moving averages, or SMAs, as the stock's average price over different time periods. And notice how the current price of $1.80 is below the 20-day, below the 50-day, and below the 200-day average. All of these levels that could have acted as a floor of support are now acting like a heavy ceiling of resistance, pressing down on the price.
The Bollinger Bands tell the exact same story. You can see the price is trading below the middle band, and it's getting pretty close to that lower band. This just reinforces that idea of sustained bearish pressure. It's classic behavior for a stock in a downtrend, showing it's kind of stuck in the lower, weaker half of its trading range.
Okay, next up is momentum. If the trend tells us the direction of the stock, momentum tells us about the force behind that move. In other words, who's winning the tug-of-war right now, the buyers or the sellers? Our first tool to measure this is the Relative Strength Index, or RSI. It's designed to measure buying versus selling pressure, and the key rule of thumb here is that any reading below 50 suggests that the sellers have the upper hand. And no big surprise here, Opendoor's RSI is clocking in at 39.84. It's clearly below that 50-yard line, which tells us pretty plainly that right now, selling pressure is outweighing buying pressure. The sellers are in control.
Next, we've got the MACD. This is another really popular momentum indicator. It basically looks at the relationship between two different moving averages to help spot buy or sell signals. So let's see what it's telling us.
And the signal here is, well, it's unambiguous. The MACD line is below the signal line. The histogram is negative. All the lights are flashing red. In the world of technical analysis, this is a clear-cut sell signal, and it just reinforces everything else we've been seeing.
And just to round out the picture, other indicators like the stochastic oscillator and the commodity channel index are also flagging bearish signals. Now, they're both in what's called oversold territory. And while sometimes that can mean a bounce is coming, in a strong downtrend like this one, it more often just confirms the overwhelming power of the sellers.
Now for our third piece of evidence, let's talk volume and key price levels. This stuff helps us understand the conviction or the oomph behind the price moves, and it shows us exactly where the key battlegrounds are for buyers and sellers.
This slide tells a really interesting story about who's participating. On the left, we see relative volume is low. That means there's just not a lot of conviction or excitement from traders. And on the right, the declining on-balance volume suggests that on days the stock falls, the selling is heavier than the buying is on days the stock rises. To put it simply, the sellers are more motivated than the buyers.
You don't even really need to know what the Aroon indicator is to get this slide. Just look at it.
That huge red Aroon down bar is absolutely towering over the tiny little Aroon up bar. It's a visual representation of just how dominant the downward pressure is right now. There's barely any upward momentum to even speak of.
And here's where it all comes together on the chart. These are the key price levels to watch. Notice our current price at $1.80 is already trading below the central pivot point of $1.84. Think of the pivot point as the main battle line for the day. Being below it is a bearish signal. From here, traders will be watching to see if the price breaks that first support level at $1.78, because if it does, the next stop could be down at $1.73.
So we've looked at the trend, we've looked at momentum, we've looked at volume. For the final piece of this puzzle, let's just zoom all the way out and put this short-term data into a much broader, long-term context. Over the past year, Opendoor has traded as high as $3.38 and as low as $1.56. This range gives us the entire playing field for its recent performance.
And there's our current price again, $180. When you place it inside that yearly range, you can immediately see with your own eyes how much closer we are to the 52-week low than we are to the high. It visually just hammers home the long-term weakness the stock has been dealing with.
So to summarize our whole investigation, every single piece of evidence is pointing in the same direction. The downward trend, the bearish momentum, the selling pressure in the volume, and the weak long-term context, they all tell one consistent story. The data is painting a very clear and coherent bearish picture.
And all of that leaves us with one final and I think crucial question. We've laid out the technical case as it stands today, and the bearish evidence is just stacked incredibly high. So the thing to really think about now is, what could change this story? What kind of catalyst, what kind of fundamental shift in the data would it take to turn this entire narrative around?